Time for the current market update. And yeah, I'm going to be discussing how the stock market is affecting you first-time home buyers after a miserable week following a miserable couple of months, along with talking about the latest that's happening on interest rates, home prices, home sales, bidding wars or lack thereof in some places, some new psycho insurance numbers, and why that condo that you thought was affordable, actually, that might be a little trickier as we march out of March and head into April. Hit me with the horns.
How to Buy a Home educates, protects, and connects first-time home buyers to qualified vetted realtors in their area. Whether you're looking for DIY information or step-by-step guidance, How to Buy a Home is the #1 resource for first-time home buyers.
What is up, my How to Buy homies? Welcome back to How to Buy Home. I'm your friendly neighborhood home buying translator, David Sidoni. And today we've got a lot of economic news to translate. It's a pile of poop heading towards fan blades, and we need to see what we can do to keep you out of the splash zone. Ooh, and that I think officially is the grossest metaphor in 6 years and 331 episodes. Now, if you're a new How to Buy a Homie, maybe you came here and you're only slightly interested in the current stuff because you're seeking the one thing about first-time home buying that everybody wants, just some freaking clarity on where to start. Cool. Don't worry about it. I got you too. I've been dropping knowledge nuggets since 2019. All of this stuff is going to help you level up, crush the confusion, and overcome the overwhelm. If you want the answer to the question, where do I start, dude? Jump to episode 272. That's the playbook on how to use the podcast library. Episode 272, Finding the Right Information from the How to Buy a Home podcast. Jump there if that's what you're looking for. Actually, that's pretty good advice for any listener who wants to maximize the most out of the entire podcast library, no matter when you started. Put episode 272 in your ear holes. You'll get tips on how to use this incredible resource and get 100 times more quality, clear, precise, and truthful information than you're going to find anywhere else online. But for today, we're going to get into the up-to-the-minute market happenings. Every Monday, unless something really crazy happens, I'm going to be like your AI cheat sheet, going over all the latest new things that are happening in the media, all the data, all the facts, and how it affects first-time home buyers. Here's a 2025 housing market truth bomb episode. The stuff that the headlines messed up, the stuff that the TikTokers and Instagram people oversimplify, and the stuff that your weird uncle who's a realtor, yeah, he doesn't really comprehend how this affects you. First up, the sinking stock market. Man, I wrote this yesterday and said it was almost a 9% decrease since December. The numbers I'm looking at right now, yeah, it's a 10% decrease. And here's the way it works. A 10% drop in the stock market is officially what the economists call a correction. Anywhere between 10 and 20, that's where they leave that. And over 20%, that's a crash. So right now, the news is all talking about the tariffs, the trade wars, and the global economics. And I know you're wondering, dude, what the hell does that have to do with housing right here at home? Okay, here's what happened. The Trump administration just rolled out a massive tariff package. 10% on most imports, 25% on foreign automobiles, and even higher for what they call the quote-unquote worst offenders like China and Vietnam. Now, this sounds like I'm talking politics. If you're new to the show, you got to know, I never talk red or blue on this show, just green. As in, how do these policies from anybody red or blue affect your green, the money angle for you? Well, in this case, here's how. The tariffs and what's happening right now, these type of big economic moves, they tend to freak out investors. And how investors move can affect not just the economy in general, but more specifically mortgage rates. See, when investors get nervous, they move their money from the stock market into safer assets like bonds. And that pushes down the yields in the bonds. The yield is basically the interest rate that you earn if you invest in bonds. And because so many investors are going in there, the U.S. Treasury and the bond people, they have to put the rates down because so much money's going in, it would just cost them way too much. And even though the yields are going down a little bit, investors still realize it's a safer bet right now because the volatility in the stock market to get something, even if it's a small return, a small gain, instead of an absolute negative that is happening right now in the stock market. So that's what's happening with bonds. And this is the reason I'm telling you that. Mortgage rates generally tend to follow the bond yields, specifically the 10-year Treasury note. And that's dropped from 4.8% to 4.2% in just a few weeks. So this chain reaction in this global economic market battle, weirdly enough, that could lead to lower mortgage rates right here. Now remember, when I report all this economic news, bad news for the economy is good news when you are a buyer, especially when you're a home buyer. So as long as you still got your job, that's not bad news for you. That's news they're reporting for people who own their homes, because their homes are their biggest asset. So when you hear bad news, it could be great news for you and what you're trying to do. Now, another person we're listening to with all this stuff is Jerome Powell, the head of the Fed, and he's watching it. The Fed says if the economy slows down too much because of these tariffs, we could see the anticipated Fed rate cuts come back. The odds of that happening, they're starting to increase. In fact, today, I just read an article a little while ago. Jerome Powell came out and said, hey, the way the tariffs are going right now, this could create some increased inflation. Again, sounds like terrible news, but as long as you're budgeting your money right, if that happens, that means they're going to cut the Fed rate, which then may affect the bond rate, which may affect mortgage rates. And in fact, mortgage rates are already reacting. Let me grab my phone and see what it is because it dropped again. Yep. We went from 7% all the way down to 6.5%. And that's happening just in the last little while. And that's a pretty big dip. And keep in mind, that 6.5%, that's just the average mortgage interest rate. We have several stories of homies getting rates near 6%, and some of them even down into the 5s. That average, that's just the starting point of what you can do if you're working with the right team. So dig into the podcast catalog to get more tips and tricks on how to get the best interest rate, including the magic assumable mortgage interest rates that can get you a miracle 2 to 3%. That's episode 326. And so what we're also seeing, because the rates have been dropping a little bit, we're seeing more home applications. They're up 9% for applications to purchase a home. Fannie Mae just released a forecasting of rates dropping to 6.3% for mortgages by the end of the year. And you know what? It could be by next month the way things are going. So now it's your time to be an innovator, be ahead of the game, be an early adopter. Get your plan started yesterday. Okay, so what's happening with home prices? Well, if you're a regular homie, that sounds weird. Yeah, bro, I'm just a regular homie. If you're a regular listener of How to Buy a Homie, you know that there's only one thing that's going to affect the home prices. Say it with me now, everybody. Low inventory. The good news about inventory is not amazing news. I don't even know if it's great news. It's just good news because we were so far down. It's encouraging data. See, what's happening is inventory is starting to climb too. After a brutal couple of years when everything sold in 37 seconds, we're finally seeing some homes get on the market and actually sit a little bit longer because there's a little bit more competition. More listings are going up, helping to balance things out. And for first-time home buyers, all the crucial information that you need about inventory, it's specific, it's regional and local to you. So the best way for you to get that information about your specific area is to grab a local unicorn real estate expert team, get their support, grab them ASAP so you can get the data that's vital for where you specifically want to buy a home. And remember, you don't have to buy with them right away. You just get the data and then you build a plan with them. You can go to howtobuyahome.com to get all those free resources. Okay, now let's address the elephant in the room, bidding wars. According to some data, in some rooms, the elephant's actually kind of more like a chihuahua, and that's a weird change. See, in February, 64.2% of all the homes sold below the asking price, and only about 20% sold with the full list price. Now, that's crazy information. So does that mean we're at the end of the bidding wars? Are we finally heading into a buyer's market? Could this actually be happening? Oh, wait, I keep forgetting. What's the one thing that's a giant major factor affecting the entire housing market all the time? Say it with me. What is it? Low inventory. Now, what I just gave you was national statistics. The numbers appear to say that bidding wars are fading, but these are the national numbers. All the homes for sale, every single one, not just the homes for the first-time home buyers. And first-time home buyer data, that's much different. Entry-level, lower-priced homes still do not show even close to enough supply for an increasingly fierce demand. I am seeing locally, and I'm hearing from my buyers and my unicorn realtors all over the country, that in the starter home market, townhomes, condos, and starter homes, it's still the Hunger Games out there. So once again, another reason why a local team's expertise can give you the exact details of what you need to prepare for. And here's some more math that's really intriguing. Even though the stat says many homes are selling for below their list price, prices overall are still rising. The Case-Shiller Index showed a 4.1% annual increase in home prices. The FHFA says 4.8%. Some cities are hotter, like New York's increasing at 7.7%, Chicago's at 7.5%, Boston's at 6.6%, but no regions are dropping, except perhaps some of the HOA and insurance areas in Florida. It's a real bummer right there. But again, bummer for the home sellers, not a bummer for you. So the stat that we're looking at for that is what we call the pending home sales. That's the number of contracts being signed, and it ticked up 2%, which is the first meaningful move upwards in a long time. As I forecasted in my winter window of opportunity episodes, springtime's here and the buyers are coming back. So what the hell does all this mean for you, the first-time home buyer? Well, straight up, it means that if you're waiting for a massive swing to come your way, it ain't happening. We're heading into the busy season of the summer months, and we still don't have enough homes for sale. So everything is moving along on a slowly inclining, increasing track. The big, incredible, affordable opportunity doesn't look like it's in the cards. So the best play is to create your own rent replacement strategy and get the best deal you can as soon as you can do it, whenever that is, so you can gain control of your future before this slow-moving ship sails even further and further away from you to the horizon. I know these are not the facts that you were looking for, but I don't play the hype game. I just drop truth bombs so your amount of regret is as minimal as possible. You see, even in all this economic turmoil, the housing market is getting a little bit more rational and kind of stabilizing. So this is a great time right now to get your team together. Talk to a unicorn agent, the kind that works with first-time home buyers, not just million-dollar investors. Build your game plan now, because if rates do take a big drop, all the buyers are going to rush in, things are going to get competitive, and boom, that window's going to be closing. Listen, you don't need to be perfect. You don't need to know it all, but you do need to stop waiting and start preparing. That's how you win this game. Especially because one of the standard first-time homebuyer stepping stone purchases, the tried and true rent replacement strategy of a budget-friendly condo, they just released some wild numbers changing that game. According to Redfin, 68.4% of condos sold below their asking price in February. That's the most in 5 years, up 63.3% last year. So yeah, the sticker prices are falling. So it sounds like this should be bitchin' news. But wait a minute, there's hidden math. Because you know what's not dropping? HOA and insurance fees. So this is where things get a little bit tricky, because condos often look like a more affordable option if you're just looking at the price on Zillow. But what you don't always see right away is the cost after you factor in the HOA dues, and those are rising fast, mostly because the insurance cost for condo buildings are spiking. So instead of just looking at a PITI monthly payment, your principal, your interest, your taxes, and insurance, that's your calculation you get for your monthly. But if you're looking at it for a condo, you're actually looking at PITI plus HOA. So here's a math example for you. A $400,000 condo might come with a $500 a month HOA fee. In a lot of cases, that means that your monthly payment will be higher with that HOA fee than if you bought a $450,000 or $470,000 single family home with no HOA. And as I mentioned earlier, in Florida, it's getting really bad. Places like Orlando are getting super hard. Condo listings there, they're up 30% year over year. And nearly 85% of all the condos are selling below their list price. That's because there's a problem. People aren't jumping out to buy because there's a lot of seniors that are offloading all their condos because all the extra costs for the HOAs with some of that insurance stuff built into that cost, well, they can't even afford that on their fixed income, even if they own the place free and clear. And when the buyers go and they actually get all the details and the math, they're just walking away from buying. So now they have a flood of inventory. And a lot of people are also looking at the HOA documents much more carefully because there are special assessments looming around the corner. Now, if you haven't heard that term before, a special assessment is when the HOAs look at their overall budget and they realize they need to tag the owners with a huge HOA increase or a one-time giant fee just so they can do the necessary repairs or upgrades or to pay for skyrocketing insurance prices to cover the entire complex. So here's your takeaway with that. When you're shopping for condos, never just look at the price tag. Look at the monthly payment, the fees, the insurance, and the long-term costs. And I say it all the time in the podcast. This can be a complex formula to see the value of the different properties that you qualify for, like way more complex than just punching in some numbers into a mortgage calculator and then go and look at the prices on Zillow. This is why I spent 6 years offering the solutions on the mic. Not every pro in real estate doesn't want to be bothered with first-time home buyers to help give you all this complex stuff. The great ones know you don't have to and you shouldn't do all this planning on your own. You shouldn't be doing this alone. You can't possibly figure it all out because there's so many factors and variables. So go to them a year before you're ready to buy. They can break down all the math for your options. And then when you're ready to go, you've got the full picture. Now let's shift back to the opportunity of this because I want to tell you where renters are still winning. There are cities right now like Omaha, Charleston, Columbia, Austin, and Denver, where homes, they're still relatively affordable and the market's moving in your favor. Like Omaha, for example, it's got a median home price of about $304,000. That's way below the national average of $425,000. And it's not just affordable, it's growing there. Omaha's gained 12,000 jobs in the last year and new construction is going strong. Nearly half of the unsold homes that are happening right there, they're new builds. You've got other cities with lower unemployment, more housing options, and builders are starting to build just a little bit outside the city for the people who are waiting on the sidelines and can't afford what's going on right in the city. So if you're willing to explore outside the obvious markets, well, then your options open up fast. So don't count yourself out. You do not have to be rich to do this. You just have to be strategic. So there you go, gang. That's what's new. You are now more informed than most real estate agents. Seriously, I wish that wasn't true, but it is. And if this helped you, hey, share it with another renter who needs to hear this. If you're ready to start your own journey right now, since the time to start was yesterday, all of you who are listening to this still have me in your ear holes at this point, you should be started. Because here at How to Buy a Home, we have a different mission than the title suggests. It's not how to buy a home next week. It's actually how to plan to buy a home in 6 months or a year or even 18 months or 24 months from now. The very best of the best of the best will help you with the plan by giving you simple action steps to help you make it the last lease ever for you. And then when you're ready to do the whole negotiating and buying, well, they kick ass at that. So head to howtobuyahome.com, get connected to a Unicorn Realtor. Someone is going to walk you through the steps, guide you in the planning, and help you make sense of all the little things that you can be doing right now. Simple stuff. This isn't the only way to buy your first home. It's truly just the best way. Brought to you by a dude who learned this the hard way and wished podcasts had been invented when I was in my 20s, instead of wasting literally, used correctly, hundreds of thousands of dollars on rent. I blew it, but you don't have to. You can do this.
Looking for more DIY education or your own personal step-by-step guidance through the home buying journey? Since 2019, How to Buy a Home has been the #1 resource for first-time home buyers. So visit howtobuyahome.com to get started.